Good day, everyone. This is Ernie Kish from the Kish Cash Fund, and we're going to give you a recap of our trade on AXL on Friday. This was an excellent trade for us, even though we lost money. The reason for that is we had a plan going in, and we did trade our plan. With all of the market activity as being down, we thought just perhaps there might be a bounce, of which there was in the opening. At least the spider opened up and AXL opened up. Usually, since we've been watching AXL for over 2 years now, when it does have a window open or a gap open, it can continue to rise. So this is the 1 minute chart. I thought I'd break it down into 1 minute increments because we were in the market a total of 3 minutes on this trade, and not too far from the open. I'll show you where we got in. Have a note here that we got in at 9:34 and 35 seconds. So that'd be 9:34 in the morning, Eastern time, of course, and 35 seconds. So let's see, this is the minute chart. We opened up 1, 2, 3, I think right in through here. We got in somewhere in here at, and we bought at 991. And after looking at what was happening, the spider was beginning to come down, and we had perhaps we made a mistake moment at about 9:37 and 22 seconds. Right about here, we sold our position at $9.87 for a loss of 4 cents. We had 600 shares. We lost $24 plus our commission, which we trade, and we have an excellent commission basis. So our commission basis on the in and out on that was $6. So we lost $30. Had we stayed in, of course, you can see where we would have continued to lose money because this thing just kept on coming down. So the decision to do that was a good decision. We can talk a little bit about that. This was my best losing trade ever. I had a stop in place of 10 cents when I had a feeling that things were coming down anyway. I just decided to abandon the position and get out. Luckily I did. It did come up a little bit, but then it really had a beautiful crash here down to about let's see, I think about $9.05 or something like that. And then of course the volatility on AXL during the day on Friday was kind of amazing, back up to yesterday's close. It wobbled a little bit, as you can see, as it's going sideways here, and then it closes, of course, at 9:42. If you were to ask me what this is going to, what's going to happen on Monday, I would have to say I really don't know. We did get that downgrade, the news of the downgrade, and then one of my my significant other shows me a futures order going in on Treasury futures last Thursday, the 25th, and it looks like there was some betting that we were going to lose our AAA rating back then. And of course, the markets, of course, were expecting some of that. Of course, they were coming down, and that's exactly what happened. I did, however, expect a little bit of a bounce, and that's why I went long here. However, when I did discover that I did make that mistake, I decided to bail with a very soft loss of again only $30. So we definitely did the right thing at that point. Let me bring up a chart of the spider, and that'll give you an idea of the reason why we decided to get out at that point rather than staying in. So here's our chart of the spider at that time, and you can see that we gapped open, and it's a 1-minute chart. So to give you an idea, what I had noticed at about 4 minutes or a little bit after I got into my trade, I thought maybe the spider was bouncing up and then going to continue higher, but I had noticed it started coming down. So it was like, uh-oh. And so I decided to exit the trade, and then it did just decide to do this. So going back to what I've been reading, Mark Douglas and Trading in the Zone, I kind of thought the night before even, I said, how far can RSIs get low? I was looking a lot of RSIs, and the market looked fairly oversold. But even though it does look oversold, there's chances are that anything can happen, and it did come down some. It looked fairly oversold here, but it did all of this before it started to go up. Had I decided to wait a little bit longer before entering, I might have seen some of these things, but we made an excellent decision, of course, to get out. We're jumping up and clicking our heels because we didn't lose a lot of money, and we're really beginning to see the differences in our trading. We had a while back, we were showing. At one point, I said, "Geez, do I really want to show a really bad trade where it blew through my stops?" And I just, I mean, I didn't wipe out my whole account, but had I continued trading that way, I definitely would have wiped out my account. And I had been trading a while, and I had known all about market analysis, and I had been studying Fibonacci bands. As you can see, I've got them plotted out on the chart here. There's Fibonacci lines here. Support and resistance. We learn a lot about a whole bunch of different things. And then we're still wondering why our equity curves are so erratic. It looks like Tony Turner would say, a kangaroo with a marker in front of a chalkboard. You just look like, you're up one day and then down the next. And that's because, and you think that, well, I need to know more about the market, then that'll straighten that out. But that's the point where you will get stuck. And pick up the book by Mark Douglas in your trading, and it'll get your mind going right. And since I've read the book a month ago, my equity curve has been doing nothing but consistent trades. And this trade that I had on Friday shows you exactly what I've learned. And I've learned to, if I'm wrong, recognize it right away and exit that position right away and do the right thing. The reason why we don't do the right thing is quite psychological, because as traders we want to win every trade. So if we're not winning in that trade, of course we're going to say, oh my goodness, I was wrong and I'm losing money. Well, psychologically, if you're wrong, and of course if your teachers tell you wrong, they usually scold at you. If your mother tells you wrong, she's scolded at you. And you put up this shield. When you have a point in your life where you have this freedom, like whether you've gone away to school, broken away from a scolding mother or whatever, now we're getting, again, into the psychology of the trade. You're going to start breaking down and understanding and realizing and learning remove the emotion, remove the stigmatisms from your trade, and start trading then intelligently. To trade intelligently, you have to remove the blockages. And the blockages are saying it's okay to be wrong. It's wonderful. If you can realize that you're wrong, immediately, like I did, say, hey, holy macro, Yahoo, I was wrong, and guess what? Let me get the heck out of here so I don't lose any money. And those are like stingers, but I didn't feel them as stingers in that trade because I learned to trade differently. I've learned to trade differently. Okay, so that's if you're having these same types of problems that I was having and your equity curve looks like that kangaroo with a marker, please read Mark Douglas's book. It will turn the light on for you, and you'll have some great positive trades, and you'll have some great negative trades. And by what I mean is the great negative trades that you want to have are these wonderful great negative trades where you only lose a teeny tiny bit of money. So, with all of that, I just want to wish you all, the best of luck. God bless. Keep green on your screen. I've had a wonderful month. This was a wonderful losing trade, and we'll see what goes on in the next month with this trading strategy that we've gone on, and the shift in what I'm doing mentally. As long as I don't refer back to my old mistakes, we should be doing fine. Okay, time will tell. God bless. Catch you later.